In the last 24 months, total construction spending in the United States has collapsed. It's down 30%, and that's a lot. At the same time, it's reported that Amazon, Google, Meta, which is Facebook, and Microsoft are targeted to spend upwards of $700 billion on new data centers just this year. Well, how do you reconcile that? How do you spend $700 billion on new construction projects and at the same time see total construction spending go down? Well, one possibility is that 30% decline in construction spending are hard dollars, kind of looking backwards. Those are dollars already spent. And a lot of those data center dollars are looking forward. It's possible this may be a timing issue. One data point is looking back and the other is kind of looking forward. The challenge to that is it's already July and 2026 is half over. Bottom line, if just these four companies are accounting for most of the new construction spending overall, then construction spending is down 30%. It means that hard numbers like we're looking at are actually a lot worse than they first appear. Let's step back and look at it from the 30,000-foot level. In this review, we'll be looking at 11 data points. As you can see here, 3 are up. They're the green arrows, and 3 are down, and they're the red arrows. And 5 are flat. And overall, you have to call that a draw. The broad business corporate market is flat. It's neither pointing up or down. It's neither optimistic or pessimistic. You really can't blame the business corporate markets for being a bit confused at the moment. With the war in Iran, with the closure of the Strait of Hormuz, with the Houthis threatening the Red Sea and the Suez Canal, with Ukraine, the drone warfare affecting Russia's oil and gas exports into the Black Sea, which really to the rest of the world's oil and gas markets are messed up. They're nuts. It reminds me of the proverbial deer caught in the headlights. The business corporate markets can't really tell if they should run or just stand there. Now let's step back and look at some of these data points at ground level. First, we'll look at total construction spending. If you're looking to buy or sell a commercial property, or if you're looking to buy or sell a business, if you need help pricing those assets, go to the description box below this video and hit more. This is a picture of total construction spending we just talked about. Again, it's down 30% over the last 24 months, and that's a really steep drop in construction spending. That's obviously a negative, but just on the other side of the same coin, let's look at Purchaser Managers Index. Purchaser Managers Index is positive. The purchasing managers of private companies are surveyed every month with a series of questions on how they think the economy is doing, if they're collectively buying supplies and equipment for upcoming projects or not. A number over 50 is considered good, and we're over that now, a little over 53, which means that although new construction spending has already dropped off, if you look at the purchasing managers, again, these are the people who do the purchasing for upcoming construction projects, and at the moment, they're feeling okay. So arguably, these are mixed signals. Another 2 data points pointing in opposite directions are retail sales and new housing under construction. First, we'll look at retail sales. This is total retail sales. As you can see, retail sales are up over 5% over the last 12 months. And that's actually really pretty good. If you look at the long-term trend line over the last 6 years, it's been, pretty much consistent. Again, that's good. Next, we'll look at new housing under construction. New housing under construction has dropped off 25% over the last 30 months. And historically, that has been a really good leading economic indicator. That's going back, over 50 years, actually. When people stand back and don't know what and when to build a new home, they're indirectly forecasting the future. And from whatever the cause, people looking to build a new home at the moment are keeping their money, pretty close to the vest. So again, we have one data point, i.e. retail sales in the positive, and new housing under construction, in the negative. Again, mixed signals. One last thing. The Houthis in Yemen are again threatening the shipping lanes through and into the Red Sea and maritime traffic that goes through the Suez Canal into the Mediterranean. This is about 15% of the total global trade and roughly 30% of worldwide container traffic. Bottom line, this is getting kind of serious, and it's something to keep an eye on. So we will. If you're a realtor and looking for a change, you might give eXp a look. I'd be glad to help. Reach out anytime.